big mover yesterday, Angel One. Well, the stock was under pressure on the back of a set of numbers that looked actually mixed, though the stock took a very, very hard knock. There were a couple of expenditures as well that spiked up in the past quarter. However, the company saw its highest ever client addition in the past quarter. To discuss this and more, we're joined by Mr. Dinesh Thakkar, the chairman and MD of the company. Hi, Mr. Thakkar. Good morning, and thanks so much for joining in. Well, a couple of parameters look very, very good in the numbers.
Thank you for having me over here.
But I think the street is a little bit cautious on the expenditure side. You saw a spike up in expenditure, particularly employee cost. Now, give us a couple of parameters. How do you see them, pan out going ahead? The cost to income ratio spiked up to 57%. How do you see that tapering down going ahead? Point number one. And your margin outlook, you've been maintaining that the longer term, you'll hit 45%. So from these levels, give us a timeline as you head towards that 45% on.
Yeah, sure. So first of all, you have to look at our quarterly number with the sense of that we are in the phase of acquiring new customer at a much higher rate. So last quarter, we acquired around 25 lakh customer, and most of these customers were acquired like in the December month. So these are upfront cost. So when we talk about cost to lifetime value of a customer, the revenues are going to follow now. So it's an actually big opportunity for us to acquire more customer at a reasonable cost where we are able to maintain our OPM. But what happens in a quarter when we acquire more customer or we get an opportunity to acquire more customer, it appears to be margin has taken a hit. But if you look at cost of acquisition and lifetime value of a customer, it appears that we are in a similar kind of an OPM what we were for past few quarters. So overall, this is just a kind of an illusion that OPM has dropped. But if you look at overall growth of client base, it has grown almost like on quarter-to-quarter basis by 16%. So that means we have added almost 4.5 lakh more customer than previous quarter. And when we come to manpower cost, that is where we are building capabilities for other business. But that impact was not huge. I think majority of impact was acquisition cost. As I said, it's an upfront cost. Second cost is that when we create more capacities, we need to invest on IT infrastructure so that we are able to keep our app glitch free and keep a very good experience for a user. So these are upfronted one-time cost.
Okay, sir, but how do you see the margin trajectory then move from here on? We get that point that you're spending now, you're bracing yourself for a big growth opportunity going ahead, and you're acquiring customers as well, which is great news. But how do the margins recover from here, and how does the cost of income dip from here? And that guidance of 45-50%, you hold on to that, right? By when?
Yeah, we hold on to that. So we are very confident that long-term margins are intact. In fact, to understand this quarter better now, you have to keep in mind that 2 months in this quarter, which is October, November, is full of holidays, festivity and all that. So usually these are the months where volume does not pick up. And we disclose monthly numbers. If you look at our monthly numbers, you will see that, number of orders that we clocked in this quarter was around 35 crores, of which 13.5 crores came in December. So that trajectory continues. So 2 months which were low. So we have fixed costs. So definitely when activity of a customer is low, it may appear that OPM has hit. But if you look at overall long-term OPM chart for us, we still maintain that we will be able to maintain this OPM of 45 to 50%.
Mr. Thakkar, good morning. Prashant here. But, Angel is the poster boy of the broking industry, and anyone who owns the stock is has done so well. So congratulations for that. Just one thing, sir, is there pricing change in the intraday cash transactions, which has led to some pressure as well? Because as you yourself said, number of orders is growing, but net broking revenue is down. So is there a pricing change?
Okay, so let me cover this point. If you look at our market share, it is decent in commodity and F&O market. In cash market, what we realize, there is a segment of customers who are sensitive to bid price. So because they trade or they invest in a low ticket and they do intraday trading. So that is where we did not want to miss that segment. So the way we approach, we look at every segment, every profile of a customer. If at all we acquire at certain cost and they are able to give us a margin of 50% or around, we would like to get into that territory. So our focus was to get a market share in cash segment. But just to give you a perspective about impact of this change of pricing that we have done, would be around 10 to 11 crores per quarter. So that is not significant. But the gain that we'll get because of this market share increase would be immense.
So, now this intraday cash segment as a percentage of, in terms of average turnover, average daily turnover, what percentage is this?
Currently, I don't have a market share, in terms of revenue, how much it contributes, but it is not very significant. But what is important is that, see, what we have realized in India, particularly tier 2 and tier 3, they start their journey with cash segment. Then they explore different segment. So for us, gaining market share over there is very important.
Yeah, because the only reason I'm asking is because intraday cash is picking up. I mean, I'm assuming, as you said, right? And then of course there is a huge F&O, where F&O, of course, it's flat pricing. So will overall pricing be on the kind of downward trajectory for you, or not really?
No, not really. That is what I am saying. This incremental client that we will acquire, we are tracking them separately. What is the cost of acquiring this customer, and what kind of a revenue we can generate from this? So it appears even this segment of customer are going to give a decent OPM. See, we are an organization who wants to be present in every segment and every profile of customer. So we don't want to miss this kind of like profile of customer who does intraday cash segment.
Okay. Mr. Thakkar,
but as I said,
morning,
impact on the quarterly is 11 crores right now, but we haven't factored in growth that we are going to get from increasing our market share in the segment.
Okay, got that. Mr. Thakkar, good morning. This is Sonia here. I want to come back to the gross client acquisition because, you know, that number is phenomenal. I mean, you've seen a 17% growth quarter on quarter at about 2.5 million. What is the expectation as we move along? Do you think this kind of growth rate is sustainable? And what are the numbers that you're targeting since you are in a growth phase, right? What are the numbers that you're targeting both by the end of FY24 and 25?
Sonia, we don't give forward-looking statement, but I can tell you one thing that, okay, today if you look at penetration in India, it is just hardly 3 to 3.5% population is active on our platform, be it stock market, be it mutual fund. So what I am seeing is that when there are around 60 to 65 crores people having a PAN account and having an association or having a bank account and having a decent saving, where they can start their journey or mutual fund or something, there is an immense opportunity going forward. But what we are looking at, what are the hurdles? Either they are not aware about this equity as an asset class, which can help them create a huge wealth. So that is where we feel that, okay, this industry has to work towards expanding this market. And we being market leader, definitely we are doing our job in terms of identifying different profile, different set of customers and trying to acquire those on our platform. That's the reason you saw last quarter, we were able to get kind of like a new customer of around 25 lakh. We are very kind of an optimist in terms of industry growth and maintaining and increasing our market share.
Got it. So on market share, I wanted to understand what is the kind of growth that you're looking at in the F&O segment. Your market share is almost at about 27% now. Your cash market share has improved to about 15%. And you did mention just a while back that in tier 2, tier 3 cities, you're looking to broaden market share further. Any kind of internal targets that you have, what could the opportunity be in terms of market share growth?
So our stated statement is that we want to be leader in this segment. So when we are talking about leader in digital segment, I believe organization who is aiming to be leader in digital segment should have a market share of around 35%. So aim is to get inch towards 35%, but 35% we should include all category of customer. We should be able to price our products properly. So our constant endeavor is to price our products and services properly and try to attract more customer on board. So overall, our target would be that we should get a market share of 35% in new client acquisition, which is the lead indicator. And progressively, we would like to get a market share in revenue. Yeah.
Sorry. What were you saying? Progressively, market share revenue would be what?
So that will lead to market share in revenue as plus whichever category we are, be it mutual fund, be it whichever category we enter into.
Okay, I wanted to talk a little bit about that because the distribution segment has been growing, and over there, you all are looking to get into loans, insurance, a few other products as well. What would the scope of work be over there? What's the opportunity like in the distribution segment over the next couple of years?
So we believe once we acquire a customer, so we have taken a cost. So because we have a good team of data science and we believe strongly in profiling a customer right and offering them a service which is needed in their lifetime for that maintaining their financial, personal finance and financial money management. So we would like to get into that saving segment where we are able to offer them a right mutual fund for them. So that is where we shifted from broking app to super app. And we saw tremendous success of putting mutual fund journey on our platform. Today, in terms of incremental SIP, we are number 2. As I said, that wherever we would like to where we would like to go in that area, we would like to achieve a leadership position. So we see a big opportunity of people who wants credit, but at a kind of like affordable price and a right kind of an approach in terms of what kind of like credit products are good for them, fixed income products are good for them. So this year we had focused apart from broking on mutual fund. Next year we would be focusing on credit business.
Mr. Thakkar, very briefly, as a very near-term question, we got big events lined up. We got the budget. We got 2 budgets, right? We got the vote on account budget and then the actual budget in July. The general election thrown in between. Typically, over the years, have you seen, a spike in very large, meaningful spike in volumes, etc. During these periods?
So there are 2 things. One, as I said, that quarter 2 and quarter 4 is always good for financial services. Quarter 3, because of festivals and all that, is always bad. So now club this with budget and election year going forward. I am very optimistic that industry will see lots of activity in terms of new customers coming in. So because we saw that proof of the concept was December when we saw this government got majority in few states, we saw a big spike in terms of active customer coming and do some activity on the market. So we are very bullish it is going to turn positive for our economy as well as for our markets.
Okay, on that optimistic note, we'll wrap up on this conversation, Mr. Thakkar. We appreciate you joining in, giving us an insight into why the past quarter appeared to be weak, but the outlook from here on is going to be growth, and you see tremendous trajectory for that going ahead. Thanks so much for joining in.